Alright, welcome to Managerial Accounting. This is our first video. And in this video, we are going to introduce major accounting, talk about what it is, and really talk about how it differs from financial accounting because most of you probably have had a financial accounting course. And so you're familiar with what we did in financial accounting. And now you can talk about how managerial accounting is different. And so if you think back to what financial accounting was and what we did there, it dealt with a company or an entity. We had a certain entity that we were reporting for, and this entity would be involved in lots of different business transactions. They would buy stuff, they would sell stuff, and they would pay for expenses. All of these different types of business transactions would create a certain kind of data. And then in financial accounting, we would take this data and we would use it to prepare financial statements. And if you remember, there are four different kinds of financial statements: an income statement, a balance sheet statement, changes in stockholders' equity, and a cash flow statement. And the financial statements were prepared in accordance with the generally accepted accounting principles or GAAP. So we've followed GAAP in preparing these financial statements, and GAAP told us what data we could use and what data we couldn't use, and also told us how to prepare that data in a way to present it to the investors. So we've had these financial statements and then we would present these to the investor. And this is financial accounting. And just a few notes: the focus of financial accounting, remember, was on the external users and really the investors. External users, these guys, these investors were outside the company and we were preparing information for them. Financial accounting also dealt with what happened in the past. That was a focus of the financial accounting, in fact. If you remember, we have a timeline over here. Let's just say this point right here represents December 31st, year 1. And then let's say this point right here represents December 31st, year 2. And I'd say that we're reporting for year 2. For what happened during the year 2? Well, in financial accounting, we will report what happened during year 2, but we wouldn't report it until right here. The year will end right here. And then maybe a few months later, maybe right here. So this is 3-1 year 3. We'd actually present the financial statements to the investor. And so the financial statements were telling the investors what happened over this period of time right here. So the focus was on the past. It was also focused on periods. We've reported for specific periods of time. If this was the annual report right here at 3-1 year 3, it focused on what happened during this year period. We also had quarterly reports as well, but it focused on the past. And it was periodic. And the other thing that was really important was in financial accounting, the focus was on providing investors with the information that they could rely on. We wanted to be really reliable. We want to make sure that it wouldn't mislead the investors in any way. And to do that, GAAP made it very conservative. So if anything, in financial information or financial accounting, information would provide a conservative estimate of what the earnings were or what assets the company had available. So it is very conservative. And we wanted to make sure that this was right. So you remember with financial accounting, we had the information audited. That's one of the reasons there's this delay right here between the end of the year and the actual reporting date, because during this time, the information was audited and we followed a very strict set of rules. Because we didn't want investors to be misled in any way, because if they were misled, they may sue the company. So that was financial accounting. Now let's shift gears and talk about managerial accounting. That is going to be completely different. We're still going to use the same data from all these transactions that the business had. But now we're going to use this data to make decisions within the company, so internal to the company. So managerial accounting is going to be with using the data within the company. So if you put managerial accounting, and the focus here is going to be on internal users basically. And in a lot of ways, this is a lot more exciting than financial accounting because we don't have to follow a set of rules anymore. We can do whatever we want to do. We can use this data, any data that we want. It can be financial data, it could be non-financial data. With financial accounting, we're basically forced to use just the financial data because that's what GAP told us. It said we can only use financial data. Now that we're looking in managerial accounting, we're using our own data. We can use it any way we want it for internal use, and we're using it to make decisions to run the company better. And so it's going to have a little bit different focus. We're not just going to focus on what happened in the past, but we are also going to care about what's happening in the present and what will happen in the future. We can use this data to make budgets. We can plan what's going to happen in the future. So we can use this data in any way we want, right? And we can use it to make decisions. And the kind of decisions that we're going to use this data for would be to do things like figuring out how much does it cost us, or how much does it cost the company to provide a particular product, or how much does it cost to provide customers a particular service. What products are the most profitable? What products are the least profitable? How do we motivate our employees? These are the kind of questions that we can ask, and this data can help us answer. And there's different techniques or ways that we can use this data to best run the company. So with managerial accounting, we really focus on using this data any way that we want to. Go with different techniques that we can use, but there's no real rules we have to follow to best run the company. And in a lot of ways, that makes it a lot more interesting than financial accounting because we're not bound by a particular set of rules. We can really do whatever we want to do.